Hello, Steve from YOUvolution Learning here, and in this video we are going to break down and make practice assessment 2 task 10 so much easier to tackle for bookkeeping transactions. I shall see you in a few minutes for the video. Okay, so task 10 in the bookkeeping transactions exam is the joint worst performing task in the exam, along with task 7. Now I do have a video on where we break task 7 down, so make sure after this one you go and check those out as well. Now task 10 is a tricky area, as we can see from here. We have 68% of students who are passing this task and 32% of students who struggle with this one. Now, if you're a student who is within this area here, the borderline area, in order for you to get from borderline to MET, you're looking at gaining an extra 2 marks. Now, 2 marks is one of those things that we all can achieve, no matter how we're struggling with this task, because 2 marks generally just means I've missed something or I've just made a daft error, and we can pick up on those and we can work through those. But if you're a student who's around about the below requirement stage, in order for you to get to MET, which is a pass, you're looking at maybe around about 4 marks, or 4 extra marks is what you need to gain in order to get you from below requirement into that pass zone, that MET area. But that again is something that we can work on. We can pick up a few more marks and then we can build upon that once we feel a bit more confidence. So I'm going to go through this task with you for practice assessment 2. We're going to look at task 10. I'm going to break it down and make it so much more easy for you. So before we do that, let's take a look at the great advice that the examiner is giving us for this task. Now, they tell us that this is looking at learning outcome 1, which is understand financial transactions within a bookkeeping system. Now, if you take a look at the qualification specification, you will see that there's quite a few little bits that are covered within learning outcome 1. And I'll go through in particular what this is kind of looking at. The examiner tells us about the strengths. So they say that classifying assets, classifying items as assets and liabilities is something that you guys are really good at, and classifying items as capital or revenue, income and expenditure, and again something that you guys are really good at. But that doesn't mean you can rest on your laurels and not stick those into your revision plan. If you're good at those, you just got to keep topping up and making sure when you get to the exam you're okay with that. The weaknesses then that the examiner is pointing out, and this is where the information from the examiner becomes really important, because if these are areas that you're struggling with, then you know that you need to identify those yourself and work on those. So the examiner also says that students have the inability to recognize how specific accounting records relate to the double entry bookkeeping system. Now, if you saw the video on practice assessment 1, you'll see how I went through that a little bit more, but again, we'll cover some of that in this task as well. Failure to produce customer and supplier account codes that are consistent with the information provided. Again, in the last video on practice assessment 1, we covered that in detail as well, how to make sure you can get those right and use information from the examiner, use information from the task in order to help you to get full marks. And then finally, incorrectly calculating the accounting equation. Now, the accounting equation is a fundamental area that you need to know as an accountant. You've got it in bookkeeping transactions, so this exam, bookkeeper controls, the knowledge comes up in that one as well, especially when you come to do some of the trickier areas. You've also got advanced bookkeeping, final accounts preparation, it'll be in there as well, and financial statements of limited companies at level 4. So understanding the accounting equation gives you a solid foundation for each of those levels through your AAT studies. So it's really important that you get into grips with that one. And like the examiner said, in this area, this is one of the areas that students do struggle with. So get that down in your revision plan and make sure you are working through this. So let's take a look at AAT's practice assessment 2 then for task 10, and we're going to break these down and we're going to make it easy to manage and approach. Okay, so this task is looking at learning outcome 1.1, which is the purpose of business documents. Now the task tells us, the information it gives us is, it is important to understand the purpose of business documents. Absolutely, that is so the case. Identify which document should be used for each of the purposes below. You will not need to use all documents and can remove a line by clicking on it. Okay, so it gives us 3 purposes and it gives us 5 documents. So I'm going to just discuss each of those and then we'll go into breaking those down so we know exactly how we need to tackle this type of question. So the first purpose that it gives us is detailing type, quantity and cost of goods supplied to credit customers. The second one is detailing amounts paid to employees for expenses incurred for business purposes, and detailing transactions with a credit customer in a given period and advising on the amount to be paid. So those are the purposes that it gives us, those 3. Now the documents that it gives us are the 5 documents that you can be tested on in this task. We've got a statement of account, we have an invoice, we have a petty cash voucher, credit note and remittance advice. So we've got the purposes and we've got the different documents. So I'm going to go through each of those documents and just explain what each of those documents are before we start to connect those documents to the purposes. So the first one is a statement of account. Now this is sent by a supplier to customers on a regular basis, normally on a monthly basis. And the statement of account will detail all the transactions that are due for payment, and it's likely to remind the customer of payment terms and payment details as well. So that's a statement of account, and that is a broad really understanding of what it is, but it does cover the key points and probably most of what you'll find in the purposes as well for a statement of account. Next is an invoice. Now this is raised to confirm the details of goods or services that have been provided to customers. Next we have a petty cash voucher. Now this is an internal document and this is completed to authorize small business expenditure, and it also authorizes staff to be repaid from petty cash for those business expenses that they paid for themselves. That's a petty cash voucher. Now a credit note is issued for errors on an invoice or issues if there are issues with goods or services that have been provided after an invoice has been raised. But it also provides official confirmation that a customer owes little or nothing in respect of the invoice that has been issued in the first place. So that's a credit note. And finally, the final document is a remittance advice. And this is what a customer will send to a supplier, and it informs the supplier of what items are included in the payment that the customer is sending over to them. Okay, so now we've looked at each of those documents and we understand those a little bit more. Let's link those back now to those different purposes. So the first purpose that we have is, it says which document is detailing the type, quantity and cost of goods supplied to a credit customer. Now, sometimes we could get confused with a statement of account, but remember, a statement of account doesn't provide the details of the quantity that's been supplied, the cost that's been supplied, and the types of products or services that have been supplied. So it won't be a statement of account, but it will be an invoice, because an invoice is what we send to the customer and it details all of that information. The type of goods or services, the quantity of those goods or services, and the cost of those goods or services as well that we supply to credit customers. So that one is definitely going to be an invoice. The next one says detailing amounts paid to employees for expenses incurred for businesses purposes. Now when we looked at each of these documents, there was only one of these documents that was an internal document, and that's the petty cash voucher, because that's what we use to provide money back to our employees if they've gone and bought something on behalf of the business. So it says there, detailing amounts paid to employees for expenses incurred for business purposes. So that is going to be the only one that's an internal document, which is the petty cash voucher. Detailing transactions with a credit customer in a given period and advising on the amount to be paid. So all that we have left is a statement of account, a credit note and a remittance advice. So remember, a credit note is something where there's been an error on an invoice, or there's been an issue with the goods or service that we have provided with, so we generate a credit note to reduce the amount that the customer owes us. That's not what this purpose is explaining here, so we can rule out credit note at this stage. So that leaves us with a statement of account or remittance advice. And again, this is something that students may get mixed up with, is what the difference between the two are. So let's take a look at each of those individually. A statement of account, as we said, this is what a supplier will send to their customer to detail the transactions that they need to pay. Whereas a remittance advice is a response to a statement of account. So when a customer receives that statement of account, when they generate their payment, they will then also generate a remittance advice to say, this is what we're paying you, this is the value that we've paid you, and this is the detail of each of those payments. So the purpose again says detailing transactions with a credit customer in a given period and advising of the amount to be paid. So that's the key there, is to be paid. So that's where the statement of account comes into play, because that's what we're sending to the customer to let them know this is what needs to be paid. This is the amount that to be paid. So the final one is the statement of account. So the main key to this type of task is understanding the purpose of the documents. What is the reason for those? What is the point of those documents? Make sure that you understand each of the documents that you're dealing with. When you generate an invoice, what is the purpose of the invoice? When you generate a credit note, again, what is the purpose? What is the point of that credit note? When a statement of account is being raised, again, what's the point of that statement of account? Make sure that when you are using those in your revision, just make a little note next to it and just saying the purpose of this document is, or the point of this document is. And that's where you're not only using those documents, but you're also beginning to understand the purpose of those as well. This one is worth 3 marks, so obviously a mark for each bit, and they should be easy marks to get when you understand those purposes, when you're working on those purposes as you go through your revision. Okay, so let's take a look now then at part B. Now this one is looking at distinguishing between prompt payment, trade and bulk discounts. It's learning outcome 1.2. So the task says organizations may offer discounts. Complete the following sentences. Now the following sentences are: a trade discount is offered to customers, and the other one is a prompt payment discount is offered to customers. And then you've got a blank to fill in. It's a drop down. So when we click on the drop down, we've got 3 options, and each of those options kind of describe each of the different types of discounts that we can offer. One of them I have a bit of an issue with, but I'll talk about that in a second. But 2 of them absolutely describe some of those different discounts that we can have. So the different discounts that we can have are prompt payment, trade and bulk. This question is asking about 2 of those, which is trade and prompt. Okay, so the options that we've got are to encourage them to pay early, who buys goods in large quantities, and in order for them to resell the goods at a profit. Now that's the one I have an issue with, but I'll come to that in a second. So the first one says a trade discount is offered to customers. So we've got 3 options, and the second one says a prompt payment discount is offered to customers, and then we just need to select the answer. So I'm going to look at the prompt payment one first. So prompt payment, as you may know, is when we try and incentivize our customers to pay us early. So when we understand that, prompt payment discount means here's an incentive, you pay us early, you get an extra discount. Out of those 3 options we've got one that even just literally says that, to encourage them to pay early. So the first one, so the prompt payment discount is offered to customers to encourage them to pay early. So that's that option selected. Now the next option that we've got available to us is who buys goods in large quantities. Now, when we look at the other 2 discounts that we've got available, we've got trade and bulk discounts. The only one that we offer when customers buy in large quantities is bulk discount, because bulk means that it just means large quantities. So the second one, we can completely discount who buys goods in large quantities, because we're not being asked about bulk discount here. We're only being asked about trade and prompt payment discounts. So we've already selected the prompt payment discount one. We've eliminated the second option, which is who buys goods in large quantities, because that describes the bulk discounts. So that only leaves us with the final one, which is in order for them to resell the goods at a profit. So that's what we select for trade discount. When we offer trade discount to customers, that means it's allowing them to be able to sell their goods at a higher profit. So the third option is what we would use for trade discount. Now, when I said before I have an issue with that, and there's probably some of you out there who probably think very similar to this. When we offer any discount to our customers, it's reducing the price that the customers have to pay us. So therefore, ultimately, all discounts that we offer to our customers will allow them to sell their goods at a profit. So I have a bit of an issue with that option. So that's why when I broke this down, I broke it down as which one is absolutely connected, which one can we eliminate, therefore what do we have left? And that's the way I would approach this task, and I would advise you to do a similar sort of thing. Go through each one and say, okay, which one absolutely describes the discounts being offered, which, if any, can I eliminate because it describes a different discount, therefore the one that's left is the one I must choose for the final one. Okay, so bear that in mind with a question like this, because like I said, I don't agree with that being on there, because all discounts ineffectively really allow customers to sell at a discount. Anyway, enough of me ranting on. Let's go on to the next task. Part C now. So this is looking at learning outcome 1.4, which is demonstrate an understanding of the process of recording financial transactions. So this part of the task in particular is testing, are you able to categorize transactions into capital and revenue categories? And this is where the examiner has actually stated it is a strength that students have. So again, for yourselves, if this is an area that you feel confident with, just have a listen to see if what I go through can help just make sure you are getting maximum marks for this part of the task. So the first thing I always go through here is make sure that we can understand the difference between a capital and a revenue transaction. And I try and keep it really straightforward. Capital is irregular long-term transactions. So when you look at the list of transactions, think to yourself, is that something that's happening on a regular basis? Like my purchases, like my sales, like my expenses? Or is this something that is only going to happen maybe once or twice throughout the year? And maybe, or not even that. And that's what a capital transaction is. It's those irregular long-term transactions. And a revenue transaction are those regular day-to-day transactions. Those transactions that are sales, purchases, expenses. Okay, so when you understand that, this question is an absolute given. You should be able to get this one right every time. Now, the question says transactions can be classified according to the type of income or expenditure, so capital or revenue. Show whether each transaction below will be classified as capital expenditure, capital income, revenue expenditure, and revenue income. And you may use each classification more than once and may not need to use every classification. So watch out for that. Because that can be a trap sometimes that students may fall into is, okay, so I've ticked 3 of them already, so that means the final one must be the one that I've not ticked. And it specifically says in the question, you may not need to use them all, okay, so don't fall into that trap. So the transactions are an amount invested in the business by the owner, a receipt for rental or spare office space, a payment to a courier to deliver goods to a customer, or a payment to purchase a motor vehicle. Now, when we look at this, there's a few of the words in here that we use straight away that tell us whether it's going to be income or expenditure. So if it says a receipt, that's going to be income. If it says a payment or purchased, that's going to be an expenditure. So the first one says an amount invested in the business by the owner. And the options we've got is capital, expenditure or income, and revenue expenditure or income. So the owner investing in the business, now this is not going to be something that happens on a regular basis. The owner will invest in the business up front. The business should then support itself. But if for some reason some of the cash flow forecasts or the budgets that the business had didn't quite come through, then the owner may need to invest more money into the business as well. So that's going to be an irregular sort of transaction. So that makes it a capital transaction. Now, when the owner is investing business into the business, when the owner is investing money into the business is receiving that. So that makes it income. So this first one would be capital income. The next one says a receipt for the rental space of spare office space. Okay, so we've got a big building and we've got some spare offices and we rent those out. And it tells us that it's a receipt, so we know it's going to be income. Now, if we're renting out one of our office spaces, we're probably going to be charging rent every month or every couple of months. That means it's going to happen on a regular basis throughout the financial year. So a regular transaction is a revenue transaction. So that's going to be a revenue income. The next one says a payment to a courier to deliver goods to a customer. So again, we've got a payment, so we know it's expenditure, but is it a one-off, longer term, irregular transaction, or is this something that would happen on a regular basis? Well, if we're couriering stuff to our customers, that's going to be something that happens on a regular basis. So this is going to be revenue expenditure. The final one says a payment to purchase a motor vehicle. So again, the clue tells us it's a payment, so we know it's expenditure. And if we're purchasing a motor vehicle, remember, a business won't do this all the time. You know, we've got salespeople or directors who have a company car. So or it might even be a delivery van, for example, just as a motor vehicle. So it could be any. So let's say it's a car, it's for one of the directors. It's not going to happen on a regular basis. You know, we'll buy a car, we'll probably keep it for 2, 3, 4, 5 years, and then we'll get another one. So that means it's going to be an irregular sort of transaction that makes it capital. And because we've paid it, it's going to be capital expenditure. Okay, so the keys for this one is picking out the key information from the task. It tells you if it's a receipt or it's a payment or it's purchased. That helps you to know whether it's going to be income or expenditure. And then understanding whether that transaction is something that will happen on a regular basis or not. And most of the time, you'll be able to see something that happens on a regular basis. And then it makes it easier to establish which ones don't happen on a regular basis. Okay, so that's part C. So let's take a look now at part D. Now again, this one is looking at learning outcome 1.4, demonstrating an understanding of the process of recording financial transactions. And this part of the task in particular is testing you whether you can calculate the value of assets, liabilities and capital and the dual effect of those transactions. So the task tells us that we've got assets and liabilities and capital are linked by the accounting equation, which is assets minus liabilities equals competent, which is assets minus liabilities equals capital. I like to remember that as always looking for competent, so you know how it falls into place. And the question says, answer the question in the table below, enter all figures as positive values. So it's important to consider our logic of our calculations here, and the information that it gives to us, it mixes the accounting equation up a little bit. So the way that we can mix up the accounting equation, especially at level 2, is you've got the normal way, which is assets minus liabilities are equal to capital. We can also have liabilities plus capital are equal to assets. So we're just working backwards there. So when we work backwards, we do the opposite what we did when we go forwards. So we've got liabilities, then we add on capital, that gives us our assets. And the final one is assets minus capital are also equal to liabilities. So those are the three really that you'll probably get tested on in this exam. But there could be others, but they're generally the three and how we can mix those up. So make sure that you have those written down, you know how they work, you understand. Like the second one where we've got liabilities plus capital equals assets, we're literally just working backwards. So we're just adding those two numbers together to get our starting figure, our assets. It's also really important that you do consider the logic of your calculations as well. So for example, you should always expect assets to be the largest figure in this calculation. You know, the business has more of what it owns, and then that's split up into its liabilities and capital, especially at your level 2 studies as well. So let's take a look at each of these questions. It says, if assets are £195,820 and liabilities are £128,421, what is capital? So we can draw that out. We've got assets minus liabilities are equal to capital. So we have assets of 195,820 minus liabilities of 128,421, and that equals, so 195,820 minus 128,421, and that equals capital of 67,399. So as you can see, the liabilities are the biggest figure. We take off the liabilities. As you can see, the assets are the biggest figure, 195,820, and then we take off the liabilities, and that will give us the capital. So we've got 67,399. So just rub that out. Okay, so the next one says, if liabilities are 70,753 and capital is 53,840, what are the assets? So now we've got liabilities plus capital are equal to assets. And remember, assets should be the biggest figure when we've completed this calculation. So I've just wrote out the calculation there. So liabilities plus capital equals assets. And then underneath, I just write out the figure. So liabilities are 70,753 plus capital of 53,840. And that is equal to our assets. So 70,753 plus 53,840. And that will give us 124,593. And again, we can see assets is the biggest figure. So in the answer, 124,593. Okay, so the final one then says we've got capital of 50,644 and assets of 89,699. What are the liabilities? So that means we've got assets minus capital are equal to our liabilities. So let's put the assets down of 89,699 minus capital of 50,644, and this is equal to liabilities. So 89,699 minus 50,644, and that will give us liabilities of £39,055. Okay, so when we are working through this sort of task, our assets and liabilities, make sure you understand how the normal assets minus liabilities equals capital can be moved around and manipulated, and then just write out each of those so you've got them when you come to the exam. And then when you get something like this, all you're doing is putting assets minus capital equals liability, and then underneath put those figures in and carry out the calculation, and that makes this task so much easier to tackle. Okay, so that brings us to the end of the video. Just to recap what we looked at, the lean outcome number 1, and we specifically looked at indicate the purpose of business documents, distinguish between prompt payment, trade and bulk discounts, and demonstrate an understanding of the process of recording financial transactions, and especially that income, and especially that assets minus liabilities equals capital. Okay, so be sure to check out our other videos on bookkeeping transactions. We've got a couple of videos on the other worst performing task, which is task 7. So if you haven't seen those already, make sure you go and check those out, and best of luck for your exam. I've been Steve, and I'll catch you in the next video.